this sort of suggests that it might go the other direction. Usually when everybody gets on one side of the boat capsizes.
Yeah, exactly.
Welcome back to the GoldSilver Show. I'm Mike Maloney, and I've got Alan Hibbard here with me, and Alan has a presentation he's going to hit me with. So, Alan, how are you doing?
I'm great. Thanks, Mike. Yeah, today I want to talk about the dollar and if it's doomed or not, right? Can anyone save it? So I saw a comment recently on one of our videos from one of our viewers that said, outside the USA, the dollar is dying. The USA is one of the most hated nations, and countries are moving away from the USD at an alarming rate. So yeah, first of all, is that your observation as well, Mike?
Well, there's a mixture going on. This is happening, but it's not actually dying because so many countries have so much dollar-denominated debt. Like George Gammon is fond of saying, the dollar has all of the apps. And U.S. bonds are used for much more than just investing in as savings. They are the plumbing in the banking system. They're, all of these banks, the euro dollar is big. There's a lot of dollars created outside the United States that we can't measure. By generating charts on the Federal Reserve, they hid the euro dollar from us quite a while ago when they hid the old version of M3. They've replaced it by a new version of M3, which is actually just M2. And so you can't paste those charts together and get a real historic picture of the total number of dollars out there, which is impossible to calculate. But the point is, even foreign banks need U.S. treasuries. And so, I've been predicting the death of the global dollar standard, and it is coming. I started doing it in 2009, and you can see these nails in the coffin. But it's a process. It's going to take a while. And yes, we keep on doing things. I mean, I wonder over the past month how many more people we turned into enemies of the United States, that they now hate us. It's we keep on going around the world where we have become the world's bully, and bullies typically aren't liked, and it's too bad. I remember during President Kennedy's regime how wonderful we had come out of the World War II. A lot of the world, they loved Americans. We sort of saved everybody. And we're doing just the exact opposite these days. I think it's disgusting and too bad. It's really a shame. But so it's a mixed bag. I agree with it, but I don't agree with it. It's gonna take a while. So okay.
Yes, fair enough. Well, we do see some long-term trends of a lot of countries de-dollarizing, but to your point, they are sort of beholden to requiring some dollars because of the legacy system.
Right.
So there's one article here on Zero Hedge, gold versus the dollar, the death of fiat in one chart. And by the way, that one chart is not this chart. It's the chart I'm going to show next. But here's what they said here is earlier today, we reported that the latest B of A, Bank of America fund manager survey confirmed what most people already knew, that the shoeshine boy, the kitchen sink, and the basement dwelling day trader, not to mention everyone on Wall Street, were short the dollar. So everyone's short the dollar. In fact, according to the fund manager survey respondents, professional traders were effectively shorting the dollar in record amounts. And that's what this chart is here. This is the net percentage of investors overweight or shorting the US dollar. And you can see here that they're shorting it almost as much as they were shorting it 20 years ago. So yeah, not a good look for the dollar.
Yeah. Well, this sort of surprises me. I wonder, 20 years ago, everything was like at its peak. January of 2005, that's, that was party time. That was when the real estate bubble was really gaining some steam, and the stock market was getting overvalued once again. If everybody is short the dollar, then this sort of suggests that it might go the other direction. Usually when everybody gets on one side of the boat boat capsizes.
Yeah, exactly. Yeah, that could be. One thing I'm noticing here is how gradual this increase is from net short to net long over about 10 years. And then I was just sort of noticing how quickly it went from net long to net short. It's like almost a vertical line. Like this position flipped around very quickly. So yeah, just interesting. I'm not quite sure what to make of it. I don't want to over interpret one single chart, but it's just interesting.
Yeah.
So there's one other chart. The actual one chart that they are talking about here in the article is this: the main beneficiary of de-dollarization is gold. And so what we have here is the share in global reserves of the dollar in gray going down over time, and gold in red going up over time. You can see that back from 2017, the trend is pretty obvious.
Yeah, I do want to point out to everybody that, they should go to ggsr21.com. It's the website for the book, and read chapter 3. So that the first thing you look at when you look at a chart like this, you see it the dollar going from like almost 60, it goes 58. And then on this side, it goes down to 8. Well, no, it doesn't. You got to know how to read charts. It's going from 58 to 44, basically. And so there's something a little bit exaggerated about this, where gold's share has gone up from 11 to 23.5. So you have to now. A lot of gold's share has been central bank purchases, but it is also just the change in the price, because they're not measuring this in like ounces, they're measuring it in dollar units. So what percentage so for gold to have gone from 11% to 23% is actually pretty impressive, and that is since 2017. So I think this is great. But then again, I'm invested in gold, so well, more so in silver, but yeah.
Right. So yeah, one thing I noticed, it's exactly what you said, Mike. It's how the scales go. So from about 58 to about 44 or something like that. And if you take the linear change here over the course of 8 years, if it drops, let's say 12%, 58 to 46, 44, okay, 14. 12 is going to make the math easier, but it's even more significant. So if that's 12% in 8 years, and it's actually faster than that, that's 1.5% per year. So in order to go to zero from, let's say, 45, even though it's already lower than that, it would only take 30 years. 30 years if this continues at a linear pace. That's like a long generation.
Yeah, I would urge people to go back and watch the video that I did about the 3 phases of a bull market, and that we have probably entered the final phase. As gold soars, and it should be putting in its most of its gains in a very short period of time. So the dollar's portion can sort of fall off a cliff because gold skyrockets. It's the portion of what is left as far as bank reserves, and then countries are trying to abandon the dollar as far as their currency reserves. They are worried about the dollar being a weapon, and so that's one of the reasons for the steepening that you see once it crosses the 50 level. That black line, it crosses that, and then it's much steeper there. Yeah, and so that steepness may continue. So you said 30 years to go to zero?
30 years if it's like linear. Yeah, 1.5% per year, 30 years.
Right.
So that's pretty soon. That's like if you're 30 years old right now and you're having a child, by the time your child is your age, like no one has dollars anymore outside the US. That's insane to think about. So, wow.
Okay.
So there's really a question here. Is the dollar doomed? Right? Like, can anyone save it? And I have the Treasury Secretary here, Scott Bessent, because it's sort of his job. He's really a dollar salesman, or a future dollar salesman. He's trying to sell US Treasuries to people all over the world. He wants them to buy those treasuries, and then they have dollars, essentially. So it's kind of his job to save the dollar. And something he said recently on Twitter or X, he said crypto is not a threat to the dollar. In fact, stablecoins can reinforce dollar supremacy. So he was asked a question in this interview, is the dollar doomed, and is crypto going to be responsible for the death of the dollar? And he took the opposite viewpoint. He said crypto can actually help the dollar. So then he says, digital assets are one of the most important phenomena in the world right now, yet they have been ignored by national governments for far too long. This administration is committed to establishing the United States as a hub for digital asset innovation, and the Genius Act moves us one step closer to that goal. Okay, so he thinks the dollar can be saved by the Genius Act and demand for treasuries, by crypto. So
by these stable coins. So they're supposed to be backed by treasuries. So what are they stable against? U.S. dollar. That doesn't mean they're stable. Where's the dollar going?
Exactly.
I mean, all you have to do is look at the price of gold, flip that chart upside down, and you've basically got the dollar as measured by gold. And the dollar is always loses value. And so it's not stable. Yeah. You shouldn't call them stable coins if they're stable to the dollar. Anyway.
Yeah. It's like two guys are skydiving without a parachute, right? And they're changing their body position so one falls faster or slower. And then they're worried that they're somehow volatile relative to each other. It's like, no, we want to fall at the same rate. Do this and slow down. It's like you're stable relative to nothing. Like the future.
Regardless, there is a moment of impact out there in the future.
Exactly. Exactly. Right. It's ugly. So something I want to point out about this tweet is that he's jumping around in his language. He's saying crypto, stable coins, digital assets, and these are not the same things, even though many people use these words interchangeably.
Right.
Digital assets is a pretty broad category, part of which includes cryptocurrencies, but there are other digital assets like digital art and NFTs, other tokens. Within cryptocurrencies are stable coins, and there's also other things that are not stable coins that are still cryptocurrencies. So anyways, what is he really saying here? He's saying crypto is not a threat to the dollar. I mean, I would kind of argue that it is, but the dollar is a threat to itself, right? All the people in charge of the dollar and treasuries and U.S. foreign policy, they're all a threat to the dollar. They're not handling it very well. Mm-hmm. Stable coins can reinforce dollar supremacy. Maybe a tiny bit, because if you force stablecoin companies to buy U.S. treasuries, okay, you've forced people, under threat of violence, essentially, to buy your shit coin, as it were, your dollar or your dollar-based treasury. So anyways, anything you want to say on this distinction here, Mike, before we go on to his next tweet?
Well, it just because he's jumping back and forth like this, and so many people do, it just suggests that he doesn't know quite as much about it as he's claiming. Yes, it is right. And like I said, stable compared to what? The dollar is not stable. And we know that it always goes one direction. It bounces up and down against other falling currencies. Let's just move on to the next one.
Okay. One thing I want to clarify here is what the Genius Act is for anyone who isn't sure. Mm-hmm. It stands for Guiding and Establishing National Innovation for U.S. Stablecoins. So it basically forces stablecoin issuers to back their stablecoins with quote unquote safe assets. I love this, right? Because what's safe? At a 1-to-1 ratio, limiting reserves to coins and currency, government money market funds, and other highly liquid assets. So essentially, if you're going to have a stable coin, if it's back to the dollar, you're going to have U.S. treasuries or, quote unquote, high quality collateral in order to back it. So that's where the demand for treasuries is coming from.
I think they're trying to regulate this. There was a stable coin that blew up a few years ago.
Yeah.
And I can't remember what the system was, but they've got the stable coin and then some offsetting coin, and something just got out of whack and the whole thing imploded, and several $1 billion vanished instantly.
Yep.
And in this case, it literally did vanish. It didn't, it wasn't a wealth transfer. It was just opening up the drain in the bottom of the bathtub. It was all gone.
Poof. Exactly. So
Right.
Secretary Bessent also said, recent reporting projects that stablecoins could grow into a $3.7 trillion market by the end of the decade. That scenario becomes more likely with the passage of the Genius Act. And here's what he says. At first glance, it sounds good, and he's not necessarily wrong. It's just incomplete. Let's see what he says. A thriving stablecoin ecosystem will drive demand from the private sector for U.S. treasuries, which back stablecoins. Okay, true. This newfound demand could lower government borrowing costs, okay, and help rein in the national debt.
Right. Okay. So I got to stop you right there.
Suspicious.
How is it going to rein in the national debt? Yeah, if it lowers interest rates, we're going to be paying less interest, except if it saves anything, a politician will figure out how to spend whatever it saves faster than it can save anything. So no, it's not going to rein in the national debt. The only way to do that is get rid of all the politicians. I don't know.
Yeah. Constrain their spending somehow. It also could on-ramp millions of new users across the globe to the dollar-based digital asset economy. Okay, true. It could do that as well. It's a win-win-win for everyone involved: the private sector, the Treasury, and consumers. These are the fruits of smart pro-innovation legislation. Okay, I mean, like, yeah, it could. But will it? I doubt it, because of what you just said, Mike. Is like if politicians, save in one area, they'll spend it, and they'll spend double somewhere else.
Yeah.
So I highly doubt it'll work. Also, he omitted here the stablecoin companies themselves, right? It's not a win for the stablecoin companies. If they wanted to buy treasuries, they would buy treasuries. The reason they don't have that many treasuries right now is because they don't want them. They don't want too many of them. So they're forced to do something they don't want to do. It's kind of a loss for them. But even if you take all of his scenario as convincing and true and possible, which it might be, is the demand going to be sufficient to save the dollar? I don't think so. I don't think it's even close. And actually, someone did the calculation and presented it at a keynote speech in Las Vegas at the Bitcoin conference. I was there for that. So this is Saifedean Amos, author of the Bitcoin Standard and the Fiat Standard. And in his keynote, he painted a picture of the rosiest of assumptions that would be most beneficial to a scenario like this, rescuing the dollar, shrinking the deficit, paying down the debt. And I'm not going to go into all of the numbers and assumptions. You can watch his 13-minute keynote if you like. But his conclusion was basically this. In the next 10 years, by 2035, USDT, Tether, a stable coin, would reduce the U.S. debt by at most $3.7 trillion or 5.4%, which is basically nothing, barely a drop in the bucket. So even in the rosiest of all scenarios, this has practically no effect on the massive debt and deficit problem that the U.S. government has.
Yeah, well, agreed. And I'm just noticing by 2030, 5 years from now, the savings are not all, look, they're both 50 trillion something. It's not that much savings. Yes. It all seems to happen in just the last few years on that chart. Very interesting.
Yeah.
So it's not going to make that much of a difference. He's making the claim it's going to drive demand, which will lower interest rates. But basically, the politicians are going to figure out how to get us deeper in debt, regardless of what happens.
Yeah, I think so too.
Yeah.
And so if this isn't a solution, what do you do? I mean, the dollar is, its days are numbered. What do you do? Well, central banks, they are planning to boost their gold reserves and trim dollar holdings. It's a simple strategy, and you don't have to be a central bank to do it. I mean, you could eliminate the dollars in your possession and convert them into gold, and voila, you're as smart as a central bank. So geopolitical risks and worries about the status of the greenback likely to drive further demand for bullion, according to a survey of central bankers. So yeah, pretty simple. And there's one chart from this article I wanted to present. Central banks are plowing record amounts into gold. And we see here, this bar is basically a purchase when the bar is above zero, and it's a sale when it's below. And this is on net for each year. And you can see a lot of purchases lately, record high. And this general trend is going higher.
Absolutely. And you see how it really launched there with the Russia invades Ukraine. It wasn't Russia invading Ukraine. It was the U.S. confiscating assets that were considered sovereign assets. And the U.S. Basically caused a lot of distrust with the dollar. And this is the central bank's reaction around the world, is they're getting ready for something. They don't trust the dollar anymore.
Yeah, that's exactly it.
Yeah.
And even if we have stablecoin legislation, I mean, it's not going to make foreign central banks trust the dollar all of a sudden, right? It's irrelevant. Things are bigger here.
Yeah.
So what I want to end on, our meme, gold is the ultimate safe haven. Gold is the ultimate safe haven. Gold is the ultimate safe haven. I don't know how many times I have to say it.
And it is, it's if you look at where it is right now, it's the second most held type of asset by central banks, and central banks are buying. And so, yeah, have you got gold? I want to thank you for the presentation, Alan. That was great.
Yep. Thank you, Mike. Thanks everyone for watching.